Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So obviously gold behaves different compared to the euro currency, just because once the conflict starts fading, the safe haven assets demand has dropped. So right now we could see that the dollar has become needless to everybody. It's just turning back the upward trend on the euro currency and other assets, and gold is turning down. But you can see that at the same time gold performance is not really fast. So probably some safe haven positions have been closed, but overall situations doesn't cancel. This is just an episode, so it doesn't cancel overall fundamental background that we are discussing regularly in our weekly reports. And this week we also talked about other issues, although they were mostly just muted in the broadcast by the Middle East conflict. And for many traders and people, it's important numbers and different events have passed unsigned. But it doesn't mean that they're not existing. So from that standpoint of view, I wouldn't say that gold is losing some bullish background, bullish sentiment. It's just currently we could consider as a retracement. And overall pace here is in the speed of this upward action tells the same. So we do not have something like really big collapse or something that could sign and indicate the changes in the sentiment of the market. This gradual action. Potentially what we could get, could we count, for example, on the butterfly here? I do not see any problems with that. So for instance, if we will use the targets, right? So I do not see any questions and actually why we can't imagine this type of action very soon. If even retracement will be deeper, it doesn't break yet the bullish tendency because we have high lows and high highs. Tight consolidation here just support the idea of the possible upper breakout. So market stands in relatively tight consolidation. Could we have here the triangle as a preliminary background for possible breakout? Absolutely. So it's also possible the same way how we got it on the euro currency. So from that standpoint of view, I wouldn't say that retracement that we're getting here is something really bad or bearish. So yes, indeed, gold market could slip slightly lower. It is possible, but until it stands above 31 area, it will keep the bullish chances. So just breaking this level will just change the tendency. In this case, market will create the low lows, and that will have to make us actually different conclusions and start searching for big downside action moves. But for now, I wouldn't say that this is something really bearish. So on the 4 time frame chart, market is moving lower and it's coming to the strong support area. Circumference support around 33. But here the one tricky moment exists. This is the target of the free drive pattern. So from the technical and theoretical point of view, I would be absolutely happy if upward action starts after these lows will be washed and rinsed. So for instance, some spike down, taking out of these lows, fast return right back up, forming some engulfing or maybe even butterfly in this particular reaction around the confluence, and that might become the great background for taking the long position. For now, it's a bit tricky moment. First, from the one point of view, yes, indeed, market already stands inside of the confluence, and even existence of the confluence by itself, it's well, some reason to consider possible long position taking, countering some pullback on reaction at this level. But uncompleted free drive pattern tells that chances that market still could show another spike. Just grab the stops below this area and complete the minimum target of the free drive. Especially when the market stands so close to these lows, it's really big risk for currently position taken on the long side. Besides, in recent session, you can see the acceleration here. So what particularly might happen? So if we take a look at the hourly chart, here's what we have. So actually, our hand shoulders on weekend works nice. So you can see that it was a bit very really wobbling action here, but this kind of the ABCD patterns upside action here based on these hand shoulders has been completed in one or another way. So this upward action has happened. But anyway, currently you could see that market has completed downside COP target and butterfly. All this stuff stands around the confluence support on the follow time frame chart. At the same time, OP target of this action stands around 32.83, which is great for the 3 drive pattern. So you can see it barely below these lows, just $7 below the 32.90 area. And personally, from the theoretical point of view, it would be great if market will hit the OP, and then it would be much easier to start thinking about taking a long position. The major risk, or but say not the risk even, the question is whether this will happen or not. So if we do not take position here and this will not happen, we will lose the opportunity to take the great position around the confluence. If we take here position and drop will happen, we will have the drop down right back down to this area. So in such a situations when you're planning to take the long position but you're not sure on what points you should do this, one of the possible scenarios is to split. So take the 30% part position here and see what will happen. If market drop, add more and you will get nice average position around 32.97, somewhere in this area. Conservative approach, of course, suggests do nothing and wait when OP will be touched and then to make the decision. Even you could make decision even after the reaction was starting. Some more advanced approach stands with the analyzing what is going on right there. So drop your time frame to the 5-minute chart, for example, and watch what market is forming here. So for instance, I already showed this in the euro currency but in opposite direction. For instance, you could see that here market could form the head and shoulders, right? That the pattern you could watch for. For instance, market reached the neckline, start pull back, you're taking position somewhere around 33, 35. But your stop in this case will be just below this area. Your loss will be very small. So you are taking position based on lows of the right arm. You even could place stop not even below the head but below the right arm. If here will be some patterns also start forming. That's another way how to act. If this pattern will not work or will reach only minimum target, that's okay, you're out and see what will happen next, watching for next OP target, trying to take position there. So that and towards the possible approach in the current situation, how usually I try to resolve them. Maybe you have your own some tactics. This is great. So if you have something to resolve such issues. But in general, I suppose that this level and points of the completion of the 3 drive, it potentially might be the area to be interesting for long position taking. If even gold will not show the real reversal, but the pullback here might be more or less significant. So from the scalp trading approach, intraday trading approach, that might be interesting.